Hello, chart watchers, and welcome to this Monday, March 4th, 2019 Market Watchers live show with your hosts, Tom Bowley and Erin Swenlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, it appears that we can't, I'm trying to share screen. I need some help here. Can you see my screen?
There it is.
Okay. Well, it looks like December, actually. We're starting to see some pretty big selling in the market. We'll talk about this in a minute, but we did get right up against some key resistance that we'll talk about later in the show. But you can see currently the Dow Jones Industrial Average down 303 points, the S&P 500 down 26, the NASDAQ down 73, and the Russell 2000 down 21. 10-year Treasury yield after showing strength last week, moving back down today, down 2.5 basis points, 2.73%. Still unable to get through the key 2.80% level, but now we've got a little bit of support down below. We'll see if we can hold 2.70%. Volatility index, this is something that's been missing in the market for quite some time, but we're getting it back today. Right now, volatility up 19% today on this selling. Healthcare leading to the downside, but really you could just about pick any sector. They're all lower. Technology also having a rough day. Communication services. When we look at the industry groups, healthcare providers having another rough day. This is a group that really has struggled over the past 2 weeks, and it is just adding to it today. Software, though, which has been straight up, really not much selling at all over the course of the last 2 months, maybe a little over 2 months. Today having a pretty rough day, down 54 points, which is more than 2% today. United Health, this is the worst performer in the Dow, definitely weighing on the Dow Jones today, and of course part of that healthcare providers group. United Health over 270 2 weeks ago, now back down to 237, so pretty good haircut there on one of the largest healthcare providers out there. And Erin, this is what you've been looking for, and I tell you, it's really interesting. We got within 0.06 of a point on the S&P 500 of the high we saw back in October on one of those reaction highs, and I'll show that on the chart just a little bit. But definitely rolling over and selling off hard today so far.
Well, come on now. Eventually you have to be right with the market going up and down. But yes, I think all those overbought conditions are finally starting to be a problem. So I would be looking for more downside this week. Oops, I gave away my answer to the poll.
Oh, yeah, too early.
Although I think everybody could have guessed what it was going to be anyway.
Yeah, and this is the week when we're now beyond the first couple of trading. I guess this is the second trading day of March, but usually early in the week or early in the calendar month, we tend to do pretty well, and then we go into a profit-taking period. So I kind of agree with you. I think this week, if the bears are going to exert their will, I think this is the week, and I think today was the time, really getting right up to that resistance level. But again, we'll go over that and talk about that in just a few minutes. But let's go ahead and get going with the show. I know we got a lot planned.
Indeed. And this week, tomorrow, Tom, you'll be doing a workshop. We have Milan Vashnu coming in on Wednesday. Bruce Fraser, Mr. Wyckoff, will be with us on Thursday. And of course, Friday, I do know that Mary Ellen will be here. So today's agenda: we are going to start off with our Monday setups after the technical news. Earnings Spotlight, John Hopkins is here joining us for that. 10 and 10, our very first symbol is going to be Carvana, CVNA, if you want to go take a look at that chart. And finally, I will be finishing up the show with the sentiment update. So stick around for that. All right, Tom, let's take it away. Technical news headlines.
Yeah, unfortunately, I'm not going to have to talk about this for very long. Wasn't a whole lot going on. We had, in terms of economic reports, December construction spending, which obviously that's a lagging report. That's from a couple months ago. But it was weak. Construction spending fell 0.6% during December, and the market was looking for a rise of 0.3%. I'm a little surprised that there was an expectation for a rise given everything that went on back in December. But anyhow, those were the numbers provided. When we take a look at the 10-year Treasury yield, we do have a, you can see right here, this move up to the upside. We did break above that 20-day moving average, which had been a problem for quite a while. topped at 275, 276 on Friday, and we are moving back down. One thing I'll be watching to see is whether or not, now that we've definitely cleared that 20-day moving average for the most significant period since the decline began back in November, can we hold the 20-day on the way back down? If we do, I think that's a good sign for the yield, and I think that could be a good sign that this market pullback is nothing more than just a pullback. But if we fail and we go back down, as I've been talking about, this is one area, one asset class that really has bothered me with the market. If there's one thing that bothers me with the market, it's the 10-year Treasury yield staying so low, because this is an indication that the economic strength that the S&P 500 is painting is going to be beautiful down the road. That picture is not, that's not the same picture that the bond market's been printing and painting. So let's see whether or not we can hold this 20-day on the pullback. As far as earnings, there really were no key earnings out today. In fact, I only saw 2 companies reporting and only one worth mentioning, and that is after the bell today, we will see Salesforce.com. So I thought what we would do is take a look here and check out the you can check out the relative strength of Salesforce.com. Now, it's been moving up, and it is in the software space, but software stocks are really getting hit hard today. I noticed a number of them, even the ones that have been reporting the best results of late. A lot of these companies have gone straight up. They're due for a pullback, and they're getting it today. So CRM just kind of being lumped in, selling off, losing the 20-day. I think this one going into earnings is going to be very interesting to see if we come back up and hold this 20-day moving average before they deliver their results at the end of the day. But software, as you can see, has been a very strong performer. We did get that breakout in software above the October high. You can see up until about 3 weeks ago, CRM was trading at a high, relative high to the software index. So it had been one of the better performers, but it has weakened considerably in the past few weeks, mostly because it's just been going sideways, whereas the entire group, as you can see, has been going higher. So that's what's caused some of that relative weakness, but it's still been a great performer relative to the S&P 500. And as we've talked about plenty on the show, software has been one of the best areas of the market. So I expect that Salesforce is going to report pretty nice results tonight. But the question is, has it already been built in with the huge gains that we've seen in software overall? That, I guess we'll find out later today when we get the earnings and we see how the market reacts to it, or to those earnings. All right, I want to take a look at the S&P 500 now. And this is, these were the reaction highs. We kept talking about the reaction highs that we needed to get through. And I firmly believe if we get through these reaction highs, I think the bear market is firmly in our rearview mirror. But the high that was set back on, I didn't realize it until I looked this morning, but the highest set back on October 17th intraday was 2816.94. Today's high was 2816.88. So we couldn't get much closer without breaking out before we saw the big reversal. And I don't know what the volume is going to look like today, but if this reversal sticks and we close down near the low of the day, I think that will probably bode not so well for the market, because I do think volume is going to be heavy. And when you get that kind of reversing signal with heavy volume, it tells me that there probably are a lot of market makers on the short side. Now, if we can reverse this and get back up over 2,800, get back closer to that high later today, and we've seen that a lot from the bulls over the past few weeks. Every time we get a little bit of selling early in the day, we come back late in the day. If we reverse today and head back toward the highs, then I would view that very bullishly and then be looking for that breakout to confirm the next leg higher. But this is going to be a big day, because I do think we're going to see some pretty heavy volume. I think we've got the reversal in play, and now the question is, where do we close? So this is something to watch as we go throughout the day. The other thing, mentioned the VIX earlier, so I want to point this out, because when the VIX is moving to the upside, that is when obviously you've got your best chance for continued selling, impulsive type selling to the downside. I noticed, and I'm not a big follower of moving averages on the VIX. I tend to just look, okay, are we trending higher? Are we trending lower? Because when we take a long-term look at the VIX, and I'll just pull up a monthly 15-year, you don't really trend in the VIX. Moving averages are designed to track trends. When a stock is trending higher, the moving averages offer support on the way up. When you look at the VIX, there is no trend. You have short-term pops and then it pulls back. And then you have short-term pops, it pulls back. And you can see that pretty clearly going back over the last 15 years. So moving averages to me, I think, can be very, very misleading on these charts. But I think it's obvious when you look, we have struggled to get through that 20-day. We have been declining on the VIX below the 20-day moving average. And we've had some intraday highs above the 20, just like today, but we haven't been able to close it. So I think one thing maybe traders will look for is to see whether or not the VIX sustains that move to the upside and is able to clear that 20-day moving average, which currently is sitting at 15.5. Right now, the VIX is at 1577. So this afternoon, if the market sells off, continues to sell off, and the VIX picks up speed, I think that could set up some additional short-term selling. And when the market sells off, as we're seeing today, it sells off much faster than it tends to go up. So that is something to definitely keep in mind as we move on throughout today's session. All right, so if we do continue selling off, where might we sell off to on the S&P? Well, I think, first of all, turning where we turned at that 28.16 level was very important for the bears. I think the selling, no matter how bullish you are, I think you had to anticipate that there are going to be sellers defending these lines, these key areas and lines of resistance above. So I think 28.16 being that last line of defense doesn't surprise me that we saw a lot of selling coming in today. But again, the question is, where does it stop? Now, we did actually have a negative divergence on this chart. I'm going to shorten this down to just 6 months. Actually, I'm going to do 3 months, I think, just so we can see this divergence. Now, you might look at this and you might say, well, we never really cleared the prior high, and yeah, the PPO starting to turn over, but it's not a negative divergence. Well, technically it is. It's based on closing prices. And if I get rid of the candlesticks, which can be somewhat misleading when you're looking at divergences, and just put in a solid line chart, you can see that last Friday, we did close at a higher high, and the PPOs rolled over. So technically, there is now a negative divergence in play on the S&P, which could lead to a 50-day test. 50-period test is what I look for with a negative divergence. Now, that divergence is pretty slight, and it wouldn't take a whole lot of strength for that to turn right back up again. So I wouldn't automatically assume that we're going to play out down to the 50-day, but I think that's a possibility here. Now that we've topped, I think a lot of folks have been looking for a pullback. We're very overbought. Some more bearish than others as far as how far you think it might pull back. But I think there are a lot of folks looking for a pullback. So I'm thinking, I'm going to annotate this. I think that first low back in February, right here, you can see these lows coming back. I'm going to drag it just a little lower to the prior high, which was right here. So I'm looking at maybe 26.75. That would be another 100 points from here. And it might be fast. It might be something that's more sideways for a while because the market's gone up so far, so fast. But you can see the 50-day coming up from underneath, and it is rising. So I think the closer we get down to that 26.75 area, I think that's where I would begin to look for a reversal if we do finish weak today. And you can see so far this candle is not looking very good. I just wanted to look at one other chart, and that is on the XLY. So let me just pull this up. And this, of course, is consumer discretionary. And consumer discretionary, you can see we topped out. First of all, some of the big selling with heavy volume began back in mid-October. And then the reaction highs came up here about 111 to 111.5. And notice that's where we're struggling here on consumer discretionary. I mention this because this has been one of the strongest areas of the market. And so watch the 20-day moving average here. If we fail to hold the 20-day on consumer discretionary, I think that could lead to some more selling. Okay, Erin, I know you've got a few more upgrades and downgrades for everyone, so why don't you take it away?
All righty, let's get started. Okay, I'm going to start off with our upgrades, of course. So we're going to first start by looking at Eaton Corp. Today, Eaton Corp was upgraded from a hold to a buy. And, oh, well, look at that. There we go. It opened, so yes, hold to a buy. You have a 50, 20-day EMA crossover just about ready to happen. That gives us a long-term trend model buy signal for the long-term trend model for decision point. We have a top right now on the PMO. Looks like we might get that sell signal. So although I like the way the OBV is rising, and I like that we're getting that positive crossover, but I think we missed our opportunity. And I'm finding this on a lot of the charts, of course. You get the PMO buy signal, and even if we had gotten in and had to, ride a little bit of messiness here, ultimately, we were riding all the way up, and now we're in that overbought territory. So I would be expecting Eaton to fall before I would expect it to rise at this point. Kraft Heinz, there's been, of course, this one was downgraded, I think, a couple times last week. Well, now it is upgraded. Morgan Stanley upgraded it from an underweight to an equal weight. And their target is $35, not too hard to make. I would say that eventually this is going to turn. I don't think this will be a GE. I think this was maybe not as... Well, I think we could see a move to the upside here, but I just don't like getting involved in these when they've had these huge gap downs like this. Obviously, PMO is, of course, very, very oversold, but you can see what happened with the OBV over that big gap down. So if you wanted to get in on this upgrade, I mean, I could see why you might, but for me, it's just not the kind of chart I like to get involved in. All right, Bed Bath & Beyond. Let's move to our downgrades. Barclays downgraded Bed Bath & Beyond from an equal weight to an underweight. And, this one was having problems even before we saw this downgrade and this big drop to the downside. We had gotten the PMO sell signal already at the end of, at the beginning, it looks like, of last week. So you already had some warning there. Plus, you had the warning that it could not get above the $17 area. It was struggling constantly in February, and it came up and came so close to getting that breakout, but it failed. And we had already gotten that PMO sell signal, so that was probably a good indication that it was time to get out if you were in. I see we're sitting on some support now, but I wouldn't trust it at this point. Enbridge, this one was downgraded today by 3 different agencies, basically down to neutrals. Market did not like this at all. Big gap down, 6% right now to the downside. We could be looking here. It's kind of unusual to get the gap on a double top, but I think you can make the case for it. Looks like an Adam and Eve double top. If we close down here below that neckline or that confirmation line right there, I would expect to move, at least another $2 to the downside. So that would bring us to about 33, which, wow, matches up almost perfectly with overhead resistance back here from October, November, and December. So I would look for this one to continue its dive downward toward the 200-day EMA. SunTrust Banks was downgraded today by UBS from a buy to a neutral. They do have a $71 target right now. So I don't. It doesn't look like they're expecting it to perform too terribly, but it's in a neutral position. I didn't annotate it, but I think you could visualize here a rising wedge. That is a bearish pattern. I would expect it to break down, and then look at the PMO. Today is the attention flag more than likely. Currently, it's above its signal line, but really, really close, 4/100ths of a point away from a sell signal. I think that's a good opportunity to leave rather than stay. And finally, the last one I'm going to cover is, I'm going to make it the right symbol here, XLNX here. All right. We see that we got a downgrade today by BMO Capital from an outperform to a market perform, which, so we're not looking, it's more to the neutral side rather than a sell side on this particular downgrade. But wow, PMO is telling us right now to definitely get out despite the fact we're on this really nice run. But I suppose if you drew a rising bottoms trend line here, we'd be getting a breakdown. So we have the 20-day EMA as possible support to look at, but an overbought PMO with a sell signal like this, I would be reluctant to get in here at all. Again, you've got really nice Scooter and you've got, OBV doing the right things, but overbought with a sell signal, I think best to stay away. That's all I had for upgrades and downgrades today. A couple of others that you might find of interest. Encana, Eversource, Extended Stay, Foot Locker, which we talked about a lot on Thursday, was upgraded today. Sodas, and let's see, Hertz. And then as far as our downgrades, Alarm.com, Dillard's, Immunogen was actually downgraded by 3 different agencies today. Nutanix, Nightstar Therapeutics, a couple there for you. I'll have these up in the MarketWatchers live recap for you to look at more closely. All right, time to move into Monday setups. And I can tell you something, I picked the wrong one this week. Not because mine did that horribly. So I'm going to pull mine up right now. AYX was the one that I picked. And boy, we were actually doing okay until Friday. And of course, today we're continuing the downslide. And admittedly, I am in this one. I'm watching this area of support.
Hey, I'm not seeing the chart.
Oh, no. Okay. That's right. Well, let's try again. That's right. Okay. So yeah, this one would have been a lot better had Friday not happened and today not happened, because we were doing all right here on this Monday setup. But I do have it right now. I'm watching the $65 level. Not liking the fact that it's already down below that 50-day EMA. But I'm going to probably hang on just a bit longer, see what happens here at about that $65, $63 level. I think this is a pretty good opportunity to find some support here, but not looking so good right now. The one I should have picked, though, Tom, I went through all of my previous picks last week, and all of them were actually down a bit on today. But the one that I should have picked, and that I picked out, let's see, I think it was, what was it, Ascend. Actually, I have it in my...
I think it's ASND.
Yeah, there it is. Hang on. Get over here to my Monday setups. I need to get to that chart list anyway. Yes, so the one I should have picked was, yes, ASND. Look what it's doing today.
Going the other way. That's a good one.
Yeah, that was, and like I said, it was the only one right now that really ended up positive. Of course, it didn't do a whole lot until today. Obviously, must be some sort of news out there on this one, but darn it, I bought AYX. I wish I had bought ASND. So what are you going to do?
Yeah, that plus 62% in a day, that would make up for a lot of bad stocks.
Yeah, I would be pretty happy. It would have, made things a lot better for my portfolio, that's for sure. All right, but let's see, which one did you have last week?
I had AMD, and unfortunately, I didn't have anything on my list that was up 62% to mask AMD pick. And sometimes I'll say, well, AMD, I should have stuck with the other one I had in my blog article, because of course I changed it last week, but I looked and that one didn't do a whole lot better. So not a good week for sure.
No.
Yeah, I mean, AMD, I think I said at the time, that it was a little bit overbought. I thought that, it was starting to gain strength on the RRG charts. And anytime you start to show more progress, I think when you pull back and you hit a 20-day moving average like this one did last week, it did start to bounce off of that. But then today it's threatening. Right now it's trading below that 20-day moving average. And so like a lot of areas of the market, I think you just got to be careful, especially if it does close weak today. It could set up for some more short-term selling.
Yep. I agree. As an intermediate term trade, though, I would probably still be holding on to this. The rising trend hasn't been broken. 200 days still there for support. I don't know. But I'm not in it right now, so I don't think that I would jump in.
No, it'd be hard to buy anything right now. You want to see how the market does today before I'd even consider it.
Yeah. So I have 6 to pick from. I haven't picked. I am leaning towards this one, though, Coca-Cola European Partners. I did my scan, my general PMO scan, and then I've developed a new one. Actually, I think I did it last week when we were doing a particular segment. Maybe it was on the scooters, but I have a new scan, and I ran that one, and so I got a couple from there as well. And I can print that up for you guys in the recap if you're interested. For now, though, let's see. PMO is getting ready to have a buy signal. Yeah, it's kind of flattening out right now, but that's because it's pulling back. And, I like to get into these after the pullback. So we're getting the pullback right now to that $47 level. So I think this one has some potential. Look at the nice rounded bottom here. That's what you want to see, are those nice cup sort of shapes when you're getting your reversals here. So I do like Coca-Cola European. Might be my pick. Not totally sure, because I want to look at these all together now on their own and see what I think that way. All right. Let's see. Capital Federal Financial. This obviously is in the financial space, a bank. I think the PMO looks really nice here. We haven't gotten the breakout, which is why I would, on a very short-term trade, I might not get into this one. So for the sake of Monday setups, I don't think I would be looking at this one that closely. However, I think for an intermediate-term trade, this one could be interesting. I didn't look at the weekly chart on this one for a longer term trade. Yeah, see, I mean, the weekly chart looks pretty darn good. I mean, I could see a move all the way up to test that high back from October. But, right now with the market being kind of soft, might be the opportunity to go ahead and just wait and take advantage once everything's completely pulled back. But I think this one looks pretty good. Markets Group was another one that I thought looked nice. We had the PMO buy signal already. I do like to try and pick them where they haven't had that buy signal, but with everything being so overbought and everything really moving to the upside, there really weren't a whole lot of picks to go into with, that weren't already overbought. Most of them were already on buy signals, but I like this 20-50 day EMA positive crossover. So I got an intermediate term trend model buy. The problem I have with picking it this week for the short term is this area of overhead resistance at about, looks like 43.50. We're rising nicely to get there, but that could pose a problem as far as overhead resistance. So that would not be my pick for Monday setups. But again, I still think a lot of these are, usually pretty good intermediate term trades. Omnicom services. This one, I like the way the PMO is just now turning up. You can see, I think you could make a case that we had an ascending kind of triangle here. We got the breakout above the overhead resistance at about 76, and now we're pulling back toward that area of overhead resistance, which actually, now that I'm looking at this, I'm thinking OMC might be my pick this week. I think this one looks great, having gotten that pullback, and I think the upside potential is a little bit better than on what was the Coca-Cola European. Star Surgical. So I've got a little bit from every different sector today. Nice PMO. Look at rising. We've got a nice slow rise here, a nice rising trend. We got the breakout from that rising trend, but that's fine. We're coming back now to test it, and the PMO is still looking very healthy. And getting a almost 4% pullback today, that gives you some pretty good short-term possibilities. And there you can see the 20 is above the 50. So wow, that one looks really good too. But I think that's more intermediate than shorter term. This one is an ascending triangle that has broken out, but you can see we had the big move to the upside and we pulled all the way back toward the open. So that always worries me a bit. We do have the PMO getting ready to have a buy signal, but you know what? It is kind of overbought right now. But I did put this in the list just because I did like the breakout, and it is a pullback on this ascending triangle here. So, we could get the move back up, but in the shorter term, I wouldn't want to make that play. So that's my choices. I think I'm going to go ahead and go with Omnicom Group, and that currently is at 76.03.
All right, sounds good. Another one in the books. Hopefully you and I will do a little better this week.
Yeah, I hope I picked the one that's going to go up 60% in one day. That would be great.
Yeah, there aren't too many of those out there, so good luck with that. Pretty impressive though that you had the one from this week. So that's awesome.
I just wish I had picked that one though.
All right, I'm going to go out on a limb, and could be a very fragile limb the way the market's looking right now. But I've been waiting for pullbacks in software, and we're getting it. So I'm going to go with. Now, I was not thinking about this one earlier today, but I am thinking about it now. I'm going to go ahead and go with it. Workday. So it's 176.86. It had got up to 200. This was right after they reported their earnings. They beat top line, beat bottom line, had nice guidance, and so forth. But the stock had just gone up so much. You can see off of the November low, the stock was down at 120. When everything else was selling off back in December, you can see the stock really not even close to its prior lows. And from the 24th of December, trading near 140, went all the way up to 200. So it went up, I don't know, maybe, over 40% in 2 months heading into earnings. So stock's gotten hit pretty hard here, but I think it could be setting up. You can see it got hit pretty hard in December when the market sold off, and then it came back nicely. I like gap support and price support. So I think you can keep a fairly tight stop here. If you really wanted to try to be a little bit more cautious, maybe see if it goes down below the gap support level intraday, and then if it bounces back up through that gap support level, maybe buy there, and then set your stop at the low that day. That would be a little bit more conservative way of possibly getting into it. But if it doesn't go down and test that level, then obviously you miss out. So it just depends on how much risk you want to take and how much room you want to give it to the downside. But I like Workday. I think eventually we're going to work our way back to the 200 level. It's just a question of whether or not this is the bottom getting to the 50-day. And by the way, there was a higher price, lower PPO, negative divergence. So I was thinking this one could maybe get back to that 50 period. Wasn't expecting it to happen in 2 days. But hey, here we are down at the 50-day. And since that low of December 24th near the 50, we haven't tested it. So I'm going to go with Workday. And this one literally is rolling the dice here a little bit. But let's go through some other ones. The one I had in my blog from this morning is Symantec, another software stock. And I think this one's down into a key area. It gapped up with earnings. It was a laggard. It's been a laggard for a while. But it gapped up with its earnings to open February, tried to make a breakout, failed, and now we've worked our way all the way back down toward the bottom of this candle, which is where the buyers step back in. So I'm thinking 2185-ish up to about 2240 is a pretty good area of support. We've already bounced off that area twice, and so this is another area. I wouldn't be surprised, especially if the market rebounds, to see Symantec bounce off of this level. Let's go through a few others pretty quickly here. FIVN 59. After gapping up with earnings, you can see it came back down. Buyers stepped in around $50, got back down there again close to that level today before we did bounce a bit. IAC, this is Interactive Corp. After gapping up, you can see us coming back down, getting close to this gap support level. I think 205 to 210, pretty nice support on IAC. VTR, negative divergence, higher prices, lower PPO, and then it works its way all the way back down to the 50-day moving average and the PPO back down near the center line. I like this one. Querto, CRTO, or Criteo. I don't know how you pronounce that, but the stock actually today, it's moving down a little lower than I would have liked to have seen. After gapping up with earnings, you can see it marked this low down around 2620 or so, and we've gone below that. You do have gap support, comes in at about 25.75. So that's where I would be looking for a reversal. Definitely below the 50-day moving average on a close, and I would be out. NNN. This is National Retail Properties. After gapping up back in February, you can see these reaction lows coming in at about 51. That was also the prior high. So I think anything is close to that 51 level, knowing your target's at 54, you can keep a very tight stop there. QSR, this is in the restaurant and bar area. After gapping up with strong earnings, you can see a couple of nice gap ups back in January and earlier in February. We have pulled back, and this is where, after that initial move up, these pullbacks just below $62 show that buyers keep coming in at about that level. Today's low was 62.08. Recent highs up over 65. I think another one's got pretty nice reward to risk. And then finally, Ring Central RNG. After gapping up with earnings, heavy volume, we're getting that first 20-day test. So this would not be a surprise to me to see this stock move back up above the 20-day, hold it, and then make another run for 110. So those were our setups for this week. We can go ahead and pull up our summary, and you can take a peek at those. There were a number of them we both had. Like I said, workday, probably a little bit of a gamble, rolling the dice a little bit, but we'll see whether or not software rebounds today.
Yeah.
All right. We'll see. Hopefully, we always say it's, we're only as good as our next pick. Right. Thankfully, we can put the other one last week's behind us. That wasn't very good.
Well, yes.
Yeah. All right, let's move on to Earnings Spotlight. This Earnings Spotlight is brought to you by earningsbeats.com. Earningsbeats.com provides high reward to low risk trading candidates, and they'll teach you to focus on the combination of strong fundamentals and strong technicals. Learn to exercise the patience and discipline of an experienced trading service. Earningsbeats.com, better timing, better trades. All right, Mr. Hopkins, you're back on the East Coast, correct?
I'm back on the East Coast. Down south, thought it would be a little bit warmer here. But that's not going to be the case tonight. It's like the market cooling off a bit.
The market's cooling off a lot, and it's about the same time things are cooling off here. I mentioned earlier I'm coaching, maybe we were talking about before the show, but I'm coaching soccer. And, of course, our first practice is tomorrow night. And I think the low temperature tomorrow night is like 28 degrees.
There you go. I love it. I love listening to you guys. I was listening to the last half hour. Mm-hmm. And I learned something new every day, Tom. For example, I heard Erin talking about ENB and giving it Adam and Eve double top, which is a first, for me to hear that term, Adam and Eve.
Really?
I think that applied more to a stock like Apple.
Right.
Oh, you were waiting for 30 minutes to use that.
I've been waiting 30 minutes.
Actually, I like it. I'll take that.
Oh my gosh!
I couldn't resist.
I didn't know where you were. I didn't know where you were going with that, but I should have known.
I had to get it in.
So hey, we're finally getting a pullback, though. I mean, the market's been needing it. It's a little bit more than the pullback. Dow 331 points right now.
Yeah, in my article, ChartWatchers article this weekend, pretty much headlined that there could be a treasure chest awaiting if you're patient.
Mm-hmm.
And the stock, we'll start with this one. The stock that I talked about was Trade Desk, TTD.
Oh, yeah.
And I've got a few stocks that have very similar patterns. So it's not surprising me, that we're getting this selling. And so you can see TTD, beautiful gap up. But then if you look at the RSI, Tom, it's just been extended.
Mm-hmm.
Just look below. You can just see this repeatedly on too many stocks. And when that happens, sooner or later, you got to come in. Now, on the other hand, if you're patient, you might see a stock like this, pull back even more, get to a point where, wouldn't it be great to see some of these stocks that have just exploded to the upside and got overbought start moving more towards an oversold condition? And certainly the key levels of support, where you could get a high reward to risk. It's just too hard to get a high reward to risk on a stock that's risen the way this has over the past couple months.
Yeah, until they get a pullback. The problem is you just have too much downside possibility. And here, I mean, the stock made a good run. And yeah, it would be perfect if you held into earnings. But, some of these companies, we get big pops on and some of them go the other way. And we have big drops. And, you never know. Even stocks that have great earnings sometimes still get hit pretty hard after earnings because there's so much positivity built into the report before it comes out. A lot of times it's a buy on the rumor, sell on the news type of a situation. But yeah, I think a stock like Trade Desk, which is selling off with all of the software stocks, obviously it's been one of the best performers. And I just highlighted a couple areas of support here, maybe the top of gap support, which I tend to view very, very positively in stocks like this. When you get a gap up to 175 and 8 million shares drive it up to 200, and you can see 8 million shares is not something that happens very often on this stock. I think if you come back down and you get to that 175 level, that's where those 8 million shares were coming in. Yeah, that's where those buyers were coming in. So, yeah, I think, an opportunity definitely exists when you get a sell-off in a group like software, which has been so strong. I think this could create some opportunities.
Yeah, I mean, and this stock too doubled over the last, couple months. Another one is OLED.
Mm-hmm.
This is a stock that exploded, also double, the past couple of months, but you can see the same pattern, beautiful gap up, great volume. But look at the mountain below on the RSI.
Yeah.
It's just, I don't think it can sustain here, but I'll be patient on this one. I'd love to see this thing pull back because it has really got a head of steam going.
Yeah, this is a tough one too, because obviously the top of that gap support would be down at 130. I have my doubts whether we're going to see that at least anytime soon. I think that the selling that we saw where the stock went from 152 down to about 140 or so, 139, that would probably be the extent. So actually pretty bullish on a day like today that the stock is only down 1%, because many stocks are getting hit much, much harder, to the tune 2, 3, 4, 5% or more.
Mm-hmm.
So stock's holding up pretty nice on a relative basis. And I like to see that in my stocks as well, because that means you got very strong relative strength.
Right. And then two other stocks. One is Wayfair W, another double over the past couple of months. And I'm only pointing these out because they all look the same. That you've got quite a few stocks that have great earnings or perceived to be great earnings, just gapped up, have gone crazy, doubling in the last couple of months, and really needs to come in some.
Yeah, that's another one. Definitely, pullback would be nice, but these are stocks I think that are well suited to outperform for a while. So if the market pulls back and you get an opportunity, these are the ones. And
exactly.
What's that?
Exactly. You got to be patient, but you might get a good shot here.
Yeah, and these are the ones that tend to outperform. I mean, when you look at the relative strength on these, and this is Wayfair relative to the home improvement index. So you can see it's literally just blowing the doors off of its competitors, and so that's leading to outperformance versus the S&P, and it's doing it when the group is not really performing well versus the S&P. So you definitely have a big leader, and so if you can get a stock like this to finally pull back at some point, or maybe just sideways consolidate, you got the breakout above this double top at 150. You got gap support at 140. You got the rising 20-day moving up in there. Eventually, we'll get a little bit of pullback and test one of those levels, maybe all of them, and that would set up a pretty nice reward to risk.
And the last one is Boeing, BA. Might as well call it Boeing, because, just look at it. Tremendous movement. Is pulling back a little, giving up some today. Question is, how far might it pull back before you want to really get involved?
Yeah, this is another perfect example, though, of a great stock. I mean, when you get pullbacks like this, these are opportunities, I think, on a stock like Boeing. I'm not saying it can't go a little bit lower, but this is a stock that everyone's been gravitating to. You can see that the aerospace stocks have broken out. You can see Boeing has been one of the best performers in the aerospace, and Boeing relative to the S&P has been awesome. And look at what aerospace, after going sideways with the S&P for a while, is now exploding over the last 4 or 5 weeks. We've seen a big breakout in aerospace stocks. So when you get a pullback and you get an opportunity to get into the stock a little cheaper, a lot of times it makes sense. But the 20-day moving average, that's one of the reasons I like to keep a chart list and be able to run scans and so forth against the chart list. Is I can run a 20-day scan. I can run a RSI below 60 scan. I can do some things to ensure that I'm getting some of these stocks on pullbacks rather than chase.
Absolutely. That's the whole point, which brings me to a little event we've got going on today. You're going to join me later, 4:30 p.m. Eastern. We're going to be looking at our chart lists. We have 2 chart lists, strong earnings and weak. There's probably 3 times as many stocks, I'd say, on the strong chart list as the weak, given the market condition. But we're going to focus on our relative strength and how you can match relative strength to some of these strong charts, and with patience, really make some nice scores.
Yeah, there's definitely going to be some opportunities. I know I'll talk a little bit about industries and how you can find some strong industries and then use that chart list to try to uncover some of the best looking stocks within the group. So, for instance, if I pulled up, say, the internet stocks, which have begun to show a little bit more strength. Today, obviously, everything's getting hit, but internet today is only down 1/3 of 1%. And you could earlier today, it was actually trying to make a breakout on a day when the market gapped up and, completely cratered and fell apart. But what I liked about internet stocks was After moving down, we sideways consolidated. We started acting better. You can see the change in character. All of a sudden, the 20 days holding on pullbacks, and we're in the 20 crosses above the 50. And notice after we gapped up, we had pulled back on the index the second week of February, and we've been holding this 1600 level and the 20-day moving average, and we've been bouncing off of it. So when I look at this, I'm like, okay, this is a group. This is an area that I might be interested in taking a look at. So one of the things, and I'll just give a brief example of what I'll be doing, is if we go into the strong earnings chart list, because I have basically the same list that you use, having been at earnings beats when this whole thing was developed. But if you go in here and, oops, I don't want to edit, but if I pull up the summary, so these are the 200, well, actually on this list, there might be 150 or so stocks that, or maybe it's 180 stocks that have beaten earnings estimates recently. And by the way, this is sorted by week, the worst performers today. And look at the software. I mean, this has definitely been a beat down for the software group today. But if I go in and I just type into this internet, then I bring up the 7 stocks that are on this list that recently beat earnings. So I already know that fundamentally these are good companies. And if I like the internet group, then it tells me, okay, these are maybe 7 stocks that I should key in on. So if I go through, and I'll just pick one of them at a time, obviously Google, everybody's aware of Google. But if I pull up Google, you can see, first of all, that the charts are annotated. So back when the internet group hit that area of support that I showed you, and let me just pull that up one more time. So right here, February 20th, 21st, whatever that is, if you look back at Google at that point, the 21st, the same time, Google was hitting key price support. At the same time, the internet group was hitting the 20-day moving average and price support. So to me, that would set Google up to be a pretty nice, solid reward to risk entry close to that 1100 level. It also had some prior support there, gap support, and Google ran from 1100 back to 1150 or 1160. You're talking 5% in 7 trading days. That's a nice little trade.
Absolutely.
And, the way you come up with these is to be aware of what's going on in the different groups. So your industry group focus, and then being able to use that to your advantage by, jumping into these chart lists and finding some individual stocks. There were a couple others. I don't know if you wanted to move on, but I got a couple others I can show here. And this is one that I think actually is at a pretty nice level. So GoDaddy, GDDY, you can see the gap up with earnings back in February. The stock was up 77. And as you mentioned earlier, John, Blue Mountains, way overbought, $77. It was just at 72 and change the night before. And then 6-7 days later, we're getting a little selling in the market. Now all of a sudden we're coming down, we're testing gap support and the 20-day moving average. So GoDaddy, I zeroed in on this particular stock as a possible trading candidate with a very minimal risk, because if it closes below, say, $72, you're probably going to be out of the stock. And, if it starts to ascend again back to the upside, you got 77 as initial resistance, but nothing saying the stock couldn't break back out again to the upside. So this would be another one. I'll give you one more in this area. Let's take a look. I did IAC earlier, Interactive Corp, so I won't touch that one. But let's take a look at Snap, because Snap all of a sudden has been much stronger. Now, this one's not really pulling back much, but here was your gap up. Look at the volume, 150 million shares. So you see how the whole group, internet was moving lower, Snap was going down with it, really started to show a little bit more when it gapped down in January and then bounced right back from it and then gapped up with its earnings. But this is one that if it were to pull back to about $9, test that 20-day moving average, I think you could quickly get maybe 10, 12% of the stock from 9 back up to the recent high around 10 or 10.20 or so.
Yeah, absolutely. And this is what we're going to talk about later today. I do want to mention, if you go to my blog, Chart Watchers article over the weekend,
okay,
there's a link in there. And anybody who wants to check it out, we'd love to have you. It's going to be a great session. If you want to hear it, but you can't make the live session, we record all the webinars. But come on. You can't beat this, really.
Yeah.
it's a great educational session for pretty much next to nothing.
Yeah. Thanks, first of all, for extending that, because I know
Yeah.
back in September, I had offered everyone a copy of my strong earnings chart list for free, but it was just a one-time thing. It was just, come in and get it. And of course, as earnings start getting reported and old companies, get closer to their next earnings, the list becomes outdated. But this is a list that gets updated periodically. I mean, every couple of weeks. And so you've constantly got the fresh list of stocks. And I know you offered last time you were on, you had indicated you'd offer for $7 for 90 days. So that's a whole quarter.
Yeah.
Constantly, having those changing companies in there, and to be able to extend it and still offer that for the next 90 days is awesome. So,
well, you got a lot of people listening to you that really love technical analysis, and they're always wanting to learn. And when you can marry stocks with strong charts with key technical indicators and criteria, it's just powerful.
It is. So you got the links here. If you want to come in, you can go through John's ChartWatchers article.
Join us, yeah.
Yeah, I pulled my article up from this morning as well, from my Trading Places blog, because if you go down to the bottom of that first the market recap from Friday, there's also a link in my blog as well for that event. So it'll start at 4:30 today, and we'll have fun.
I'll see you later.
All right. Always.
Thanks much.
Thank you.
Bye-bye.
All right, and there is a recap of some of the stocks. There were a couple on the list I didn't get to: IQ, eGov, JCOM. They're all in that internet space, though, and that's one really nice feature of stock charts too. Is if you keep a chart list, and it doesn't have to be a strong earnings chart list. It could be a 50-day test. It could be whatever you want that chart list to be. You can always go in and type in, the sector or the industry group, and it automatically will come up and show you the charts within that chart list that are in those groups, which I don't know, Erin, I think that's a pretty nice feature to have. It helps keep me very organized in my trading.
Absolutely. And the cool thing is you can scan on a chart list. So if you have a good list with a lot of great candidates in it, it's, we make it easy.
Yep. Stock charts definitely makes it easy. And if you're not a member of the stock charts, that was the other thing I didn't mention. If you do that $7 special with earnings beats, in order to get the chart list, you have to be a stock charts member. Hopefully that makes sense. You can't download a chart list into your account if you don't have an account. And you do have to be an extra member or above in order to download someone else's chart list. So just keep that in mind. Right.
Because if you're a basic member, you only can have one chart list. So that's the main reason for that.
Right. Trying to
download
that second one, it's not going to work.
No. All right, let's go ahead and move on to the 10 and 10. I've been scurrying in the background to get them all loaded up here in the RRG. And here we go. Pretty interesting mix. I mean, I'd have to say we've got all the rotations this time, but a lot of northeast direction. So a lot of you have been finding some that clearly must have some pretty good momentum or features to the chart, which is why the RRG is looking pretty good. And as far as sectors, I'd say people really want to look at some technology stocks. Just looks like it. So probably look at a few of those. All right, Tom, let's go ahead and get started with CNVA Carvana.
All right, CVNA, you can see here on your list. I think that there's a change of character on this chart. I mean, we had an uptrend in play up until early September 2018, and then into the year end and to start the beginning of this year, just, had this downtrend. And you can see the highs that I connected here with this downtrend line. Finally, we broke out above it, though. We broke this downtrend, and this connected 3 and almost 4 points. And that's always very important to me. When you do a trend line, you can always have 2 points that you connect and call it a trend line. But I think you have to start getting at least 3 or more before, to me, it starts to have a little bit more of an impact. But here we broke out above this trend line. Look at the volume picking up as we make this move to the upside. And also look at the PPO. It had been languishing in negative territory for the most part. Now it's positive. So this is telling you that your short-term moving average, your 12-period moving average, is pulling away from your 26-period moving average. And so when that's happening, you've got stronger momentum. You're above the center line, which means you're 12 days above your 26-day. And you can see with the volume coming in to support it, I would actually be a buyer of this stock on a pullback to test that rising 20-day moving average, which is why I put that green arrow in there.
All righty. And the most popular in the chat room, you actually looked at Workday, so the other most popular is Apple. I know we mentioned it in the last segment, but I don't think you looked at it.
Yeah, I'm going to pull this up on a relative basis. Apple was actually having a pretty good day today considering everything else going on in the market. I mean, we were trying to make a breakout and may still do it before the end of the day, which is good news in the short term because Apple needs some good news. I don't particularly like the chart, but it has begun to show strength within its peer group and versus the S&P 500. You can see it's trying to move to about a 2.5-month high relative to the S&P. So I do see some improvement in the chart, but it's also, I'd like to see some volume, something really come in behind this stock on a breakout. Now, we got a false breakout earlier. I don't like those, especially if we close near the low of the day today. But if we could get a breakout above 175 on a closing basis, get some volume coming in, that might lend itself a little bit better to what we're seeing on some of these relative charts. Here's the computer hardware absolute chart, which clearly had bottomed back in early January and has now been moving up. But you can see on a relative basis, when you look at the computer hardware relative to the S&P, it still hasn't been able to get above that early February high. So I want to see the relative strength continue. I don't want to just see 2 weeks of relative strength and then nothing more. I want to see another breakout. I want to see this begin to trend higher. Same with Apple's relative strength here, trying to break out above that prior relative high. So there's some positives here, but I also think there are some negatives in terms of relative strength. So let's get this breakout on Apple and then go from there.
All right, let's see. The next one, how about the Wheat Fund? And that's WEAT.
All right, I have to say I've not ever looked at this before. Don't need it on the relative chart. But we're in a downtrend. Volume is heavy. I mean, given what the stock market is doing, if I'm looking to outperform the benchmark S&P, it's going to be really tough to do it with something that is broken down. I mean, sideways consolidation for a while. Support was clearly set right at about 590 or just above 590, and then we lost it. And we did so with very, very heavy volume picking up. So there's no doubt in my mind that for now, this is something I would avoid. I mean, value investors might look and say, well, it's probably going to bottom because it's so oversold. And maybe we get back up to that 20-day if that's your style. You certainly could go for it, but that's not my style. I don't like trading. I don't like trying to hope that I get the reversal on something that's underperforming the major market. So I would pass on it for now.
All right, next one I have up for you is Liberty Broadband, and it's a longer symbol, LBRDA.
All right, LBRDA. Nice breakout, nice volume on the push to the upside. Broken resistance becomes support. So let me just illustrate that because that's probably the biggest thing here on this chart. Here were your highs. I think you can go across and see that the 86 level was really difficult to try to get through. We finally did on an increase in volume in late January, early February. And after breaking above it, here's the pullback where we come back. We were overbought, still stayed close to overbought levels, and we remain there. But I think that we've established really good support now at 86. So if we were to pull back, I think the 86 level is where I would be interested.
Okay, let's see. The next one is Medifast, our only consumer staple, MED.
All right, another one that I'm not going to be overly excited about. I think if we pull this up on a relative chart, I think it'll be self-explanatory. You can see everything trending lower from left to right across your chart. If I want to own a stock, I really want to see, at a minimum, I want to see the last couple of months where we see everything going up. And that is not the case here. You can see that the food products group relative to the S&P, down near a 52-week relative low. That's not what I want to be looking at. Now, you might view that as support, saying, okay, we're going to bounce off of it. But again, I'm not trying to find bottoms in stocks or in industry groups. I want to go with what's working now. And so this is a stock that personally I would just avoid because of that. I think that the move to the upside recently to the 140 area is something to watch. I think if we can get back through 140, with some volume start to turn up on the relative charts, then we might have something. For now, I would pass.
All right. Let's see. The next one is going to be One Oak, which is OKE.
Yeah, they reported earnings last week, I know. There was the gap down on earnings. Held the recent price support area, so I'm going to say price support is at 64. But if we look across the board, it did almost make a breakout, taking out the July high, almost taking out the July high. We got 69. You can see the resistance was up at that 70 area. But I think short term, what I would be watching is on the gap down. We gapped down to about 66 and change. You see that intraday high where we got up to about 67? I think we're parked right now in a fairly narrow range between 64 and 67. And I want to see which way we break. The volume trends are not good. So if we break here, this looks like a topping head and shoulder pattern. Left shoulder, neckline, head, neckline, moving back up into the right shoulder. So if we close below 64 and the volume's heavy, I'm going to be looking probably for a measurement down $5 to about the 59 area. And maybe back into this 58 where we had some support. So I'm a little skeptical because of what's been going on since earnings, but a topping head and shoulder pattern does not confirm until you get a breakdown. So 64 would be the level I'd watch closely here.
All right, let's see. Next one will be Edwards Life Sciences, which is EW.
Okay, it's in medical supplies, and medical supplies really has not been a very good area within healthcare. If you look at the medical supplies index relative to the S&P, has not been very strong, and that's one of the things that bothers me the most probably is that the group overall has been weak. Now, when you look at EW, though, relative to the S&P, it's been outperforming. Relative to the medical supplies, it's been outperforming. So you've got a weak group, but you've got a strong stock. And so I think I would be watching key support levels. And if I was in it, because it's been so strong, I'd stick with it. But if it starts to break down, you got to realize you're not in a great group. So I think 165 is a level that I would watch very closely to the downside. If you want to give it down to the 50-day because it's so close, there's also gap support right here that you can see right around 163. So let's just call it that. I'm going to say 163 to 165 is your key support on EW. As long as that holds, I'd stick with it.
All right, let's see. The next one will be from the, I think it's, yes, software, Atlassian Team, TEAM.
Yeah, this one I traded recently, and it is bouncing off of the earlier lows and right at price support. And some of these software, I have a feeling, and I think Team being one of them, they're going to hit some support levels where you're going to see buyers coming in. This has been one of the strongest areas of the market. Probably got a lot of folks on the sidelines waiting for a pullback. And that might be why we're seeing some strength off of this 100 level. You can see that was the prior high that we had back in January with the heavy volume gap up, came back down, and then we went through that level. Now we're testing it for the first time. If Team were to break below the 50-day moving average, then we might have some more difficult times ahead. But as long as we hold that 50-day and especially this 100 level right here, I think it goes higher. All right, we got two more.
Next one will be William Lyon Homes, WLH.
All right, and well, I'm a fan of the home builders. I'm maybe a little concerned about this particular stock within the home builders. It started to come off the bottom versus the S&P 500, and it's definitely started to improve against the home building group. So just make sure that continues. If it starts to roll back over, say, I would even mark this. I think I would even be looking at something like this. See this low right here? I want to make sure that what it does is it continues to outperform the home construction. If I'm going to be in home construction, I want uptrending stocks. I want relative strength within that group. So it's begun to show it, but I can't ignore all the relative weakness that it has had over the last year. So if it starts to show any signs of rolling back over again, I'm going to be out. I want to stick with the ones that are working in the group. Now, from a price support perspective, I think we've had some multiple tops that come in here at about 1350 or so. See these two tops, we broke out, and now on pullbacks, we've been holding this area. So I think that level plus that rising 50-day moving average is something I would watch along with the relative strength that I just talked about.
Excellent. All right, the last one then, it'll be Ford, F.
Okay, well, the good news is we're coming up on strong seasonality for the autos. And I'm going to come back to the Ford chart in just a second. But let me show you the DJUSAU, which is the automobile index on a seasonality chart. And if we go back 20 years, look at April. 80% of the time it goes higher, and it averages going up 9%. And March's average is going up about 1%. So it's the start of a period when we tend to see some pretty good relative strength on autos. Now, I would not buy just because seasonality. I want to see what's going on in the chart and be comfortable with the chart. And when I look at Ford, it's been downtrending relative to the S&P. The group has been downtrending relative to the S&P. Ford is starting to show a little bit of relative strength within the autos, so that's one positive. But we haven't made a breakout. So, looking at this chart, I think the first thing I want to see is an absolute price breakout above $9. If we can get that and then continue to show relative strength here versus the peers, knowing that the group does well as we head into later into March and into April, then maybe it becomes a play. But one thing I always show, and let me go ahead and save this first, and then I'll show you one last chart on Ford. The biggest problem I have with the automakers is that when you look back at their long-term chart, I mean, really, the only thing you could possibly be getting into these companies for is their dividend. This is a 15-year chart. Ford is at $9. Ford was at $9 back in 2004. It went through, obviously, the rough time when we had all the problems, the bear market, 2007 to 2009. It comes out of that. But even if you look back at the last 4 or 5 years, we've been in a bull market, but you would never know it looking at the Ford chart. So I always have problems. I rarely trade Ford. If I trade anything in the autos, it's probably going to be Tesla or maybe Ferrari, stocks that have shown some strength, some relative strength and growth potential. So I'm not a big fan of Ford.
All right. Well, that's the last one. So you prefer driving a Tesla as well or a Ferrari?
I've never driven either one of them.
Oh, my.
And I drive a Ford.
Oh, well, there you go. So
I won't
drive it. You don't want to own the stock.
Yeah, I don't want to own the stock, but I'll own the car.
All right. Well, here are the symbols that Tom just annotated. I will have these up in the MarketWatchers Live chart list. Just go to the Articles Blogs tab, click on the MarketWatchers Live blog, and the link to these charts will be right there at the top. And of course, I always have the links in the MarketWatchers Live recaps. All right, time for our final market update. These are some ugly charts on this candle glance, I can tell you right now. And here we go. So what we're looking at right now, obviously, is quite the slide in the markets. I've been waiting for this, and we're finally getting it. Right now, you can see that the Dow is down over 400 points right now, 1.5% pretty much. S&P 500, same big slide. And you can see that back on 27 February, we've now gone below that particular low as well in the intraday low. NASDAQ is continuing lower, but holding on to the support at that 27 February intraday low. But it is currently down. Let's see, NASDAQ is actually down, oh my goodness, a little over 1%. Mid caps, S&P 400, continuing to slide. Looks like with the mid caps, you might be seeing a little bit of a pause here. Same with NASDAQ. Maybe we've hit some intraday lows there. Not so certain about that. Mid caps are down almost 1.25%. Russell 2000 looking ugly as well, down almost 1.5%. We could see that Canadian markets are also on a slide here. likely affected by what's going on here in the US. And they have, let's see, the Canadian markets have gotten below previous intraday lows from last week on the 27th and 28th. And here we go. The Treasury yield is falling right now, currently 2.722%. And the VIX, wow, look at this spike on the VIX. We are now looking at readings at 16.79. That's up quite a bit from what we've seen earlier. Of course, we started the day down at 13.5 for the VIX, and I'm going to show you a chart on that later. UUP is up slightly, hit an intraday high, does seem to be pausing at the gap that was at the open. Maybe we'll see some more upside movement there. GLD gold, after the really difficult week, last couple days of the week for GLD, looks like we are pausing, still in negative territory and down 0.21% currently. USO, big gap up, looked like it was going to have a heck of a day here, and then it just has been falling off the cliff since then. Still positive, up 4 cents at 11.70, and TLT, a 20-year bond ETF, looks like it's forming a little bit of a flag here. Got that gap on the open. We'll have to see if we can continue that move to the upside for TLT, currently up 95 cents. And let's see, one last thing I'm going to show you is the sector summary. So let's go ahead and take a peek at that. Currently, as you can see, as far as the sectors go, and I'm going to just make sure this is the most recent. Yes, not enough red on that other one. All right, so the best funds really are those defensive sector funds, but even those are down well over 0.5%, with real estate down almost 0.7%, consumer staples down 0.8%, and then you can see healthcare really taking the biggest hit, down almost 2% today. Financials down over 1.25%, as well as technology. And that's all I have for the final market update.
All right. Well, I'm going to eat a little humble pie here, because it's always great when you post a blog article and the title of it is that, you know, you're showing little signs of topping right before the Dow drops 400 points. But hey, it is what it is. And my point here in the article, and I just wanted to go through it, one chart here, is that the NASDAQ, the first thing you have to see in order to have more selling on a daily chart is you've got to start to see breakdowns on the hourly chart. So you're not going to get a breakdown on the daily chart before you get one on the hourly chart. And so the first key area of support I was noting was the last time we dropped back on the NASDAQ, just looking back at these intraday charts, was down to the 7,500 level, and that would have been about a week ago. And so when I pulled this chart up and put in the live, you can see we are now today all the way back down to that level. So this, I think, is the first short-term test for the bulls, trying to hold on to the 7,500 level on the NASDAQ. We got down to 7,501. We're currently 7,513. Obviously, it would be very bullish to bounce back off of it and not so bullish to break down below it. So just wanted to point that out before we get into the sentiment. I will hand it back to you, Erin.
All right, here we go. You know, interesting sentiment today, I would have to say. Let's go ahead and start our little PowerPoint here. Today I'm going to cover, as always, the put-call ratio. We'll look at the American Association of Individual Investors poll, the National Association of Active Investment Managers exposure to the market. We can see what the big guys are doing with their money. RIDEX ratio, we're going to see what the cash flow.
I'm not seeing your screen.
Oh, okay. Well, let's fix that. Hang on right now. All right. Do you see it yet?
No.
Oh, wow. Okay. Interesting. Let's try the PowerPoint here. That way. How's that?
There you go.
Okay, that'll work. I'll have to switch it a little bit later. Okay, RIDEX ratio, we're going to look at the cash flow and what is going on with actual money, not just the polls. Wall Street Sentiment Survey, that is a poll with, of market timers. We'll look at that. I want to show you what's going on with the VIX. Very interesting chart. And then we are going to finish off with gold sentiment. So let's go ahead and get started with that. All right, everybody see my screen? Can you
Yep,
see my
you're
chart?
good.
Okay, good. Now that I know that, that's good. All right. So the first one is the put call ratio, the 10-day moving average. Look at it for CBOE, equity, and OEX. And currently what we're looking at is, we've continued to see this rise, very hesitant, very tortured, as Carl likes to call it, really moving sideways. We're still trending higher. But what we're watching for is a top, because when we get the top on this put call ratio, and I do have the scales inverted so that I can see overbought at the top and oversold at the bottom, we are getting overbought as far as the put call ratio. And when we start to get that turn to the downside, that's typically when you're going to see prices move much lower. And here were two times where I saw, that hesitant move as far as the put call ratio goes, and what happened when we finally got the tops. So I'm looking at this to be topping probably next week. You're going to see that on the chart. AAII investment, let's see, investor sentiment. This is the poll. Really interesting chart today. This, of course, is a poll that closed last Thursday after the market closed. So this data is from last week, what the pollees were thinking on Thursday. And you can see there was certainly a preponderance here of bulls in relation to bears, so much so that it has put our bull bear ratio above 2, and that is considered a very climactic reading. You can see we hardly get above that, and typically when you get to these really high readings on the AAII, that's generally the time you're going to start seeing price decline. There's a couple of examples here. We had pause here and then we moved down. Back here, we ended up moving mostly sideways. So it's something to keep an eye on. At this point, I would look at this as short-term bearish. And of course, today, I think it's playing out. Name Exposure Index. We picked this up from the National Association of Active Investment Managers, as I said. This tells us how exposed they are to the market, what their portfolios exposures are. And currently we are seeing elevated readings, not as high as we have seen previously, which is when I really get concerned, is when they get really climactic. Right now, they're still about the same. I would still say that this is somewhat bearish for the market, just because we did get a tiny bit of a rise this week. And then also just the reading itself at just above, I'm sorry, just below 80. Next up, it's a Wall Street Sentiment Survey. And if you have a chance, go take the poll. We'll be talking about that soon. But on Friday afternoon, Mark Young, who's been on the show before from wallstreetsentiment.com, he comes on, he sends the email, and all of the market timers have to give the idea, basically take the same poll that's out there for you right now. What do we think the market's going to be doing? Are we bull, bear, or neutral? And for the last 4 weeks, I have been a bear. And I continue to joke with Mark every time I send the email, well, maybe it's this week. Well, maybe it's this week. Well, I think we finally are going to hit it this week. But as you can see, right now, the bull-bear ratio, let me make sure this is, yes, that's up to date. So right now, we're really just above 1 as far as the ratio. As you can see, we do have a preponderance of bulls. We have more bulls than bears, but not enough to really make this ratio above 2, like we just saw it on the AAII poll. But I would say still, with market timers being fairly bullish going into the week, that generally means that it is bearish for the week. Not that market timers are wrong. A lot of times we're right, but usually when you poll everybody, that's when you find out where the majority lie, and generally with sentiment, it is contrarian. So if everybody tends to be more bullish, then that's bearish for the market. So let's take a peek at the RIDEX ratio. Love this chart, love it. Carl developed this, oh gosh, years and years ago, back when these funds were managed by RIDEX. And since then, they were taken over by Guggenheim, but they still manage these funds and they still report the assets after the close at the end of the night, or basically in the middle of the night. They'll tell us how many assets are in their bull and bear funds, as well as the money market. So we can actually track that to see where the assets are going, how much is in each fund, basically where is the actual cash flow going. I mean, you saw that AAII poll. We had a high amount of bulls. So what we should expect to see on this chart is a nice rise on the bull sector funds. Well, we're getting that. We are getting that, not increasing to the degree I would have expected, given this really big move to the upside that we have had. But we are seeing money continuing to leave the bear funds, and we're still seeing money continuing to come out of the money market funds. So overall, I would say when you look at this, that is, obviously bullish sentiment going on here with the cash flow. And so when you look at the bull bear ratio, we're only mid-range here in the range that we look at generally. And again, it's inverted. So when you get a high bull assets, that's going to be in your denominator. And as your denominator, let's go back to calculus, as your denominator approaches infinity or gets higher, the smaller your ratio is going to get. So as you can see, we've got a very small reading on the ratio, but we can get even lower than that. So I would say we're still in, bullish sentiment out there as far as where money is going. I think we could get more bullish. But at this point, now we're starting to get that top. I would start to expect to see a bit of a rise next week as far as the money markets go. Maybe see some folks pulling out, taking some profits, hopefully. All right, next one, let's move over to the VIX, and then we're going to look at gold. I'll finish with that. So this is my VIX chart. I do add some breadth in here with the issues, the advancing and declining issues, just so I can get, again, I look for climactic readings on breadth. And you'll find in the DP alert and in the weekly wrap in the Decision Point blog, you will find us, Carl and I, going over breadth and the VIX in both of those blogs. Interesting today, well, of course, we've got really right now you can see declining issues continuing to outpace, of course, the advancing issues by quite a bit. I look at this as an initiation, meaning this, when you get a climactic reading after a pretty nice couple of days or a rally, and then you get these climactic readings to the downside, that to me is it's climactic. And so I have to really address whether it's an initiation or an exhaustion. Well, I would say it's not an exhaustion as far as selling, because we're just now starting to see this major selling going on. So I would definitely look at this as a selling initiation, meaning we should expect more downside. Interestingly, I have the little arrow pointing here because last Friday we did get a puncture of that upper Bollinger Band. And typically when you get those punctures at the top there, remember again, inverted scale, when you get really low readings, that means everybody is very bullish. And when you get the puncture, usually of that band, you're going to see prices reverse and to the downside. And sure enough, that's what we are seeing now. We came close to puncturing that upper Bollinger Band a couple of times, and you can see what generally happens when we get close to doing that. We did have a decline there. Back here when we got right up into that Bollinger Band and punctured a little bit, we ended up with more downside. These are the things I'm looking for. This is what we're seeing. The interesting thing to note here is the fact that these Bollinger Bands have been shrinking quite a bit. So of course that means your volatility in general is, hasn't been swinging that much. But today, now what do? You have a puncture of the lower and the upper Bollinger Band. Well, like I said, I default to what we're seeing as far as breadth, and it's pointing to the downside. So I would be continue to be bearish going into this week. And then let's finish off with gold and look at the discounts and premiums on the Sprott Physical Gold Trust. That's how we measure whether we've got bullish or bearish sentiment going on based on whether we get high, excuse me, high discounts, or if we get or if we have premiums. If you get premiums, that means, of course, people are very bullish. They're after gold. When you start seeing the discounts, then, of course, people are more bearish about gold. Well, clearly, gold has fallen off the cliff. It's continuing to fall. I was really looking for it to hold this area of support and then make its way back up. But with this really bad decline, correction, it's just not looking too good. I have to go down and expect GLD to come down here to about 120. Hopefully we can hold this area here at 121. It is now getting very oversold as far as price. PMO could certainly stand to get a little less overbought, but we do have the sell signal. I noted earlier, not today, this is actually from last week, guys. I noted this problem here as far as the negative divergence between the PMO tops and the price tops. And typically when you get those kinds of negative divergences, you look for downside movement. We had already started that move to the downside. And of course, now it's really moved to the downside, breaking all kinds of support. And discounts are still, I would say, high enough to say that we are discounts show bearish sentiment currently. Granted, we've seen higher before, but right now I would say I would consider this to be definitely bearish sentiment, and that would be bullish for gold. Okay, and that completes the sentiment report. Let me go ahead and give you a wrap up of what I just looked at. Alrighty, so in summary, and I'll have this in the MarketWatchers live recap, we've got neutral to bearish for the market based on the put-call ratio. AAII is very bearish for the market. NAME is bearish for the market. And Wall Street sentiment is somewhat bearish for the market. I see a trend here, Tom. Next one up is RIDEX ratio is bearish for the market. And you can see that breadth and VIX are also bearish for the market. And finally, the gold sentiment, as far as gold goes, we're getting neutral to bullish for gold just because we have pulled back quite a bit, and we do still have a pretty decent discounts going on as far as the Sprott Physical Gold Trust. So I would name that out as neutral to bullish. And that completes it, Tom. We're time to look at that poll and see what's been going, see what's going on, as if I've convinced anybody to switch their vote. That might have been bulls, because I think that the sentiment is clearly a problem right now.
Yeah, well, you got a lot of folks looking for lower prices, and I was trying to debate, because I guess technically we have to base it on where we are right now versus where we're going to be Friday on the close.
Yeah, and like I said, I always feel a little bit disadvantaged because I have to give my vote on Friday, and everybody else, you guys get this help on what's happened Monday.
Well, I'm not sure if it's help or not, because if you thought it was going down and now you're already down 1%, now you got to wonder, okay, from here, what do you do?
Yeah, that's true. That's true.
And I'm going to stick with the bullish side. I don't know. I just feel like we're going to bounce off the 20-day moving average. I really like the NASDAQ. And part of it will come down to how we do this afternoon. The NASDAQ just bounced 30 or 35 points from hitting that support area that I had pointed out earlier. Mm-hmm. And so I just don't know if the bulls are done here. I'm not surprised we're having the day we're having, but I think it's going to take a little bit more effort to clear some of these hurdles to the downside.
All right, we'll see.
All right. Well, that is a wrap. I want to thank everybody for being with us today. Please remember to complete the survey as you exit. As a quick reminder, MarketWatchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Monday afternoon, everybody, and we will see you back here tomorrow. Happy trading.